Good morning, ladies and gentlemen, and thank you for holding. Welcome to the Odontoprev conference call to discuss the earnings of the second quarter and first half of 2021. I'm Stella Hong, IR Supervisor, and today we have with us Mr. Rodrigo Bacelar, CEO, and Jose Roberto Pacheco, CFO and IR Officer. This webcast is being recorded and streamed only on the internet, and the link is available on the company IR website, ri.odontoprev.com.br, where the respective presentation is also available, or on the company's YouTube channel. This video conference has simultaneous translation. To activate, click on the interpretation button, the globe icon at the bottom right of your screen, and choose the preferred language. You may also click on mute original audio. Next, we'll begin the Q&A session. To enter the queue, your name and company must be included via the Q&A button at the bottom of the screen. The questions will be answered in the order they are received, and when announced, a pop-up to unmute your microphone will appear on the screen. We suggest that your questions be asked all at once. It's important to note that submitting questions is only allowed for participants on the webcast platform. The aforementioned instructions are also available in the chat as well as the presentation of this webcast. Before proceeding, let me mention that any statements made during the call relating to the Odontoprev business perspectives, projections, operating and financial goals are based on the beliefs and assumptions of company management and on information currently available to Odontoprev. Forward-looking statements are not a guarantee of performance, as they involve risks, uncertainties, and assumptions because they relate to future events and therefore depend on circumstances that may or may not occur. Investors and analysts should understand that overall conditions, industry conditions, and other operating factors could also affect Odontoprev's future results and therefore could lead to results that materially differ from those expressed in such forward-looking statements. Now, I'm turn the conference over to Jose Roberto Pacheco to begin his presentation. Pacheco, you may begin. Thank you, Stella. Good morning, everyone. Welcome. Thank you very much for your interest and trust. We are Odontoprev. I would like to thank you for attending this event. I would like to thank you for attending this company event to present the performance of the second quarter and first half of 2021. Now, to begin the presentation on slide number 3, we can see data from ANS since 2006, where the dental plans on the right-hand side of the screen continue presenting continuous growth with over 20 million new members compared to the increase of only 11 million members in health plans, a more mature market segment. And specifically in 2021, we see the gradual resumption of the net additions in the industry, not only in the healthcare industry, but also in dental, with a growth of 756,000 new customers in dental plans, exceeding the 27 million members at the end of May. According to our next slide, number 4, we see the revenues and average ticket of the main dental plans in Brazil. We highlight the Odontoprev portfolios in the corporate segment, which is large companies, and non-corporate segments, which includes SMEs and individual plans with an expressive leadership in both. On the next slide, number 5, according to ANS data, we can see companies' presence in all regions in Brazil in a genuinely domestic operation with an accredited network in more than 2,500 municipalities and exclusive distribution channels, the only one in the market. On slide number 6, we can see the net addition of 152,000 new members in the quarter and over 500,000, more precisely 506,000 new members in the last 12 months. The best commercial performance in over 10 years, not only for the data for the second quarter, but also in the 12-month evolution, as you can see on slide number 7. On our next slide, number 8, we see the quarterly evolution of revenues with a sequential growth and in the annual variation after the harsh impacts of the pandemic into Q20, and especially in the months of April and May. On slide 9, we demonstrate the execution of the long-term strategy. We can see that the corporate segment revenues has increased 16% since 2014. On the other hand, revenues of the non-corporate segment, SMEs and individual plans, goes from 284 million BRL in 2014 to 753 million in the last 12 months, a 16% growth per year in the period. Added to a superior ticket higher than the industry, better profitability with relevant barriers to enter. On slide 10, we can see the DLR per segment compared to 6 months 2020 and the first 6 months of 2019, with a significant drop in corporate SME DLR, and in the individual segment is stable. The consolidated DLR was 39% in the half year, more competitive than the historical standard, demonstrating the resilience of the Odontoprev model that even in an adverse scenario such as the pandemic and competition. On slide 11, we see that bad debt was 2.8% in the quarter, lower than the historical levels, mainly given the transition and growth of the non-corporate portfolio in bank channels, the shareholders that provide us with such a relevant competitive edge to expand company margin. On our next slide, number 12, we can see cash generation. We see that with a drop in the cost of services, gains in SG&A, the half-year EBITDA was 297 million BRL, greater than 1 year ago, with a margin increase to a record 32% in the period. On the next slide, number 13, we highlight the new profile of financial investments in which, during the second quarter of this year, we moved part of the current assets portfolio to long-term government bonds with post-fixed and pre-fixed interest rates higher than the short-term interest rate with the same credit risk profile. The new instruments are accounted for in the curve, mitigating the volatility of the consolidated portfolio and will be held until maturity and were the main reason for the higher financial income observed. On the next slide, number 14, we see that in the quarter, the company generated 108 million BRL in cash, ending the period with net cash of 858 million BRL with no debt. On slide 15, we can see the annual shareholder compensation. On March 30 of this year, the Board of Directors approved the buyback program of up to 10 million shares, aiming at maximizing value generation for shareholders, given that in Odontoprev's view, the current price of shares does not reflect the fundamentals of the business model and competitive differentials, as well as the perspective of future return. During 2Q21, approximately 7 million shares were bought back at an average cost of 13.05 BRL with an investment of 90 million BRL, which added to the cash dividends already paid up this year, totaled 325 million in shareholder compensation accrued in 2021. Moving on to the end of this brief presentation, according to our next slide, number 16, in our ESG highlights. We published the annual sustainability report last month in June, based on the international guidelines set forth by the GRI. In addition, we highlight the achievement of the Amigo do Clima certificate in which total carbon emission since the company's establishment back in 1987 has now been neutralized in 2021. Still on the sustainability agenda, we were very pleased to receive yesterday the confirmation of Odontoprev as part of the British Index portfolio, FTSE for good for the fifth consecutive year. Moving on to our next slide, 17, we see continuous growth in the number of individual shareholders, which for us at Odontoprev is a great reason for pride, as well as the growth of our globalized investor base with an approximate free float of 86% with investors from over 30 countries. Once again, we would like to thank you all for your interest and trust in the company. Now, I would like to move on to our Q&A session in our common practice of a 45-minute earnings conference call. Thank you all. Now we will begin the Q&A session. To enter the queue, click on the Q&A button on the bottom of the screen and enter your name and company. Our first question is from Emerson Souza from Itaú BBA. Thank you, everyone, for your time. I have a couple of questions, actually. The first one is that I'd like to know how the company sees the capital allocation strategy going forward now that we see a scenario of tax reform and dividends, and the Odontoprev investors are very interested in that type of investment profile. That's my first question. So the second one is I'd like to understand the performance of net adds across the quarter. The NS figures had a very shy performance, and you exceeded the expectations in net adds. So I was wondering if that was closer to the end of the quarter, focused on a specific client or portfolio. So if you can give us some more flavor on that would be great. And last, I'd like to understand the DLR, still the levels are lower than 2019, so I'd like to know how you think that will behave in the second half, if you see that increasing in July, given more vaccination being carried out in the country. Thank you. Good morning, Emerson. I'll make the first comments in relation to capital allocation. So historically, the company aims at exceeding the cash or distributing the cash generation not only in the period but also every quarter. So our priority was always cash dividends, and the company maximizes that tool year after year, quarter after quarter, and that will continue in 2021. Next, we also had relevant dividend distribution. We're listed it in the new market where the minimum payout is 25%. According to our bylaws, we have the double, which is 50%, and in practice, we've been doubling that. So it's been 100%. That has been our practice, our common practice. What's new now, as we mentioned in the presentation, is the buyback program, in which the company has been aiming at signaling the market in relation to the current share price. What we see in the tax reform may increase the importance of the buyback programs as of 2022, in addition to the fact that the company is a traditional participant in the inorganic translations market in the dental industry. So in fact, there were a number of acquisitions that were made in the past years in the value chain, not only in the share that the company has in other companies that were acquired, but also in the value chain, be it in materials distribution or even outside the country. So I believe that that topic is in constant dialogue with the market. Let's wait for the conditions in relation to the tax reform, but without a doubt, we will not hesitate in paying attention to that and being extremely focused on adding value to the all of our company shareholders. Rodrigo, can you touch on the other topics? Good morning, Emerson. Thank you for your question about net ads in the month. You mentioned in writing that there was a difference between June and the others. Well, what we can say is that net ads came from a number of initiatives in the country. We're talking about the free enrollment contracts, where companies negotiate an advantageous price on behalf of employees, and the employees may enroll if they believe it's interesting. So we have some prospecting actions where we visit these companies to talk to employees that haven't enrolled in at first, or new employees, as that always happens. So we visit companies to have an opportunity to talk to them and offer our benefits again. In that type of operation, we have expressive gains during the pandemic as we were able to prospect more members remotely or virtually as we're having this video conference today. So if we consider that in these operations we've been improving in relation to the peaks of sale and the type of material that we give them and planning and scheduling with these companies, in addition to being able to reach out to more people in less time, today we can have meetings with 150, 250 employees. We even had a meeting with 500 employees that were plugged into a conference like we were doing right now. So that there's that type of scenario that's coming from the operating scenario that has improved in this operation that we call as if we're fishing in an aquarium and we're able to sell to them. Another important aspect is being integrated with Bradesco Healthcare, not just Bradesco Healthcare, but also their sales strength, their sales organization, where we also can operate faster with better apps, better facilities. So the Bradesco sales force is entering the game even more, be it through contracts together with healthcare plans or individually just with dental. The Odonto system rollout is another important aspect. Odonto system in 2018, when the transaction was approved, we were present in 11 states and 51 cities. Those 11 states, after 3 years, were in 22 states in Brazil, and the 51 cities turned into 211 cities. So Odonto System is already running, providing quality service according to our more affordable model from the Odonto System across all of Brazilian territory. So we're adding a number of sales activities and improvements that happen. We wake up in the morning thinking of mouse and go to bed thinking of mouse, and we are completely focused on dental plans, and we improve that on constantly. In addition to new partnerships in the medical area, so there are healthcare operators that do not have dental plans, and given our high quality, high capillarity, and easy to plug in because we have that type of contract for years now, we can provide that type of service for healthcare operators. So when you bring together these four major causes or effects that I'm mentioning, that is what explains our net ads. And lastly, you asked about DLR. So I'd like to say that in individuals, I know that this question is going to come up from many of you. So in individuals, as Pacheco already mentioned in the preamble, it's actually going back to normal. June was very similar to what we expect as normal activities. We control this on a daily basis, and we can see that based on the approvals that we give people for their treatment. So we have high predictability. In July, we believe that the levels would be similar to June, but it's not as strong. It's still a bit lower. But in a way, we believe that for the fourth quarter, this year, we should see something similar to what we believe is normal. So, vaccination is advancing in Brazil, more flexibilization in terms of working hours. So, trade isn't opening up, restaurants. So, we'd expect, let's see, of course, that on a daily basis and monthly basis, but we would expect normalization by the fourth quarter. So, let's wait and see. With that, I believe we've answered your three questions. Thank you once again, Emerson, for your question. Thank you, Rodrigo and Pacheco. Everything's very clear. Next question is from Ian Seskin from BTG Pactual. Good morning, everyone. Can you hear me? Yes, we can perfectly. Okay. My first question was about DLR, but now it's very clear about how you see the recovery of frequency. My second question is about SG&A. So when we look at the quarter, we see that there's a gradual improvement in SG&A. So I'd like to know, can we consider that in the future gaining more efficiency in that same line? And also, in a one-off sense, although there was a first half of improvement, what was more important in the second quarter? Thank you, Yan. I'll start off and then I'll hand over to Pacheco. The S in G&A has to do with sales expenses, right? So that has to do with the sales mix. And as Pacheco already mentioned, and that was in our report, the fact that retail performed underperformed, it helps in SG&A because the S is a more expensive channel, right? Or retail is a more expensive channel. So we're separating channel, audience, and segment. We'd like everything to walk and run in at the same speed, but we do have eggs in different baskets. So what we saw right now in the second wave in the beginning of the second quarter was still a moment of some difficulties in retail. They were still trying to take off, and especially when we had the second wave with more restrictions in February and March. When that happens, the retail expenses, which are higher, bring down that index. So the fact is, we have some channels that are more expensive, others that are not so much, and we have to see how sales will behave because that comes automatically from the mix. There's nothing actually premeditated in higher commissions or anything of the sort. It's actually a result of the mix and how these sales are behaving. About G&A, another thing that we have as a goal is that we have to leave the pandemic with the best of both worlds, right? We had the pre pandemic world with a lot of travel, printing the dental cards, manuals, post office expenses, rental, a number of expenses that we had that. And as we became more digital during the pandemic, like I mentioned in Emerson's question, right, about travel that we visit to companies to prospect, that was a great learning experience for us. Obviously, we still will visit some companies and have our roadshow to show the benefits of our products and prospect more and bring in more members. But it's also clear that we have to take advantage of this digital possibility where it would take a long time to get to remote areas by plane. And then there's car travel and hotel expenses and even a risk of driving on bad highways, right? So we can do that differently now when we gain from that. So in G&A, there's an ambition of doing everything that we used to do well pre-pandemic with everything that we were able to improve and do better now during the pandemic and leave with the best of both worlds. So some of you asked, at what level will this become stable? I don't think it's going to be as the pandemic, or actually pre-pandemic, and it's not going to be the same as the pandemic because we had 3 or 4 months where everybody was grounded, staying at home. So we clearly have something in the middle, I believe, where we can include all the improvements that we've had, and Pacheco has mentioned in other calls, in travel, in printing the cards, and so on. So, Pacheco, what would you like to add? As Rodrigo mentioned, SG&A is about margin increase. It has been and it will continue to be. In selling, given the bankalization of the individual plans, and so the sales expenses are more relevant in individual plans, and with the growing bankalization of the individual plans, we've had lower conditioning compared to retail stores. In G&A, an important thing to add is technology. So you've already seen that, and you will continue to see relevant increase in company capex, which is used in technology, and technology is enabling us to not having to have actual dental cards and other aspects, and changing the systems, large systems that we have, the biggest in the world that started in 21 and will continue in 22. So we believe in continuous efficiency gains based on state of the art technology. And that's something that's already been happening since mid last year and becoming even stronger now in 2021 and 2022. Thank you. Thank you, Rodrigo. Thank you, Pacheco. Our next question is from Vinicius Ribeiro from UBS. Go ahead. You can hear me, right? Yes, we can. Good morning, everyone. My two original questions were questions that were already asked. So, can we hear some more about net adds for the second half? We understood that the second quarter performance was endogenous. And supposing that we get an economic recovery, do you believe that this sales momentum will continue going forward? So, what do you think has to happen for that to continue? And the second question, similar to that, but now focusing on the long term, which is recurring on my side, sorry to be repetitive. How should we think about new distribution channels or an attempt to be part of platforms and all of that? That's it. Thank you. Great, Vinicius. Thank you for your question. I had seen those questions and you improved them. And that's great because now you're covering other sides. Very interesting. About growth, I believe that there are different profiles. So the growth of corporate or SMEs, those sales take longer. So we visit companies in the corporate world, which is a more penetrated market. These companies, many times, already have a contract. So it's about a contract renewal process. And for, I don't know, 3 months before that or 6 months before that, we get in the game to negotiate that. That might be connected to a healthcare plan from Bradesco, for instance, or from one of our other partners that do not have dental. We can jump in alone as dental. So it's a longer process, a longer maturation process. And we work hard. We have a dedicated team. We have this all mapped out in each region in Brazil, each company, who has the contract, who is the broker, how many employees, how we get ready to jump in the game. So there's all of this sales planning that is highly focused so we can be a part of that. We may have companies with more employees or not, so it has its own dynamics. In terms of SMEs, we created something very interesting, which was we segmented SMEs. So for the upcoming months, and even and especially with the strong participation in Bradesco, you'll see SME with a strong performance. And ANS classifies SMEs as 1 to 199 members, and we have different segmentations and different pricing. And these contracts, when they're packed with healthcare, and we've been doing that more and more, they have lower DLR and longer duration. So once again, we're putting our eggs in different baskets and we're balancing the plates, and we're very excited not only because of the Bradesco sales channel and doing that better and better, but also because of the characteristics. And I believe that we got it right with this segmentation and also the sub segmentation in SMEs, as well as the ability of having longer durations and lower DLR when these contracts are connected to healthcare plans. So that's the first part of your question, and Pacheco can feel free to answer that. What was your second question again? I forgot. About channels. New channels, right. That's another important aspect. In the platform concept that you mentioned, our total Odontoprev portfolio, and this is interesting, we have approximately 25 to 30% of our portfolio is already on an open platform. We provide services for retailers, we provide several services for credit card companies or private label cards, and we do that for operators, other channels, for websites. So that's a strong footprint. We have a very interesting pipeline in that. When we expand into that platform concept, we have to be sure that after it's plugged in, it's going to work. It can't be a headache, right? It has to work well. So we have our homework in technology. I have to say that 5 or 10 years ago, when we started with those first services, the systems were customized. But now what we see is with the systems architecture that we have and and apps and the APIs that we develop to plug and play with partners is going faster. It's instant. And we can bravely say that we're going to market to talk to these companies because we can, in a short turnaround time and just little customization, we can capture that and bring it into our framework, and with that be able to generate all the necessary information, exchanging files, billing, sales, members, and so on. So having that strong presence, 25 to 30% of our portfolio is in that concept. We have many new contracts that we started in that modality starting in January. And we have a pipeline, an interesting pipeline to evolve in that sense, as you well remembered. Thank you for your question, Vinicius. I'd like to add, Vinicius, the Mojidonto acquisition will come in the third quarter, 65,000 members, as we have already commented. And you're interesting to your point, our growth is seasonal. It's more relevant in the second half of the year than the first half. So what we see, 2021 will not be an exception to that. And Rodrigo gave a lot of examples. And I'd like to mention again, Odonto system rollout that enables us to have a new product for a new patient profile, not just limited to the Northeast, now available in the South and Southeast. So we're more constructive in these ads in the second half of the year, having interesting performance once again and operating in 500,000 of members in the past 12 months. Thank you, Rodrigo and Pacheco. Our next question is from Pedro Mariani from Merrill Lynch. Pedro, go ahead. Can you hear me? Yes, we can. Thank you. Good morning. Thank you for taking my question. The two questions that I submitted were already answered. So I'd like to take this opportunity to ask about the ticket dynamics. I know that in the segments, the dynamics were different. So if you could give us some more details on that, what's causing that dynamic, if it's competition, if it's the mix. So any details that you can give us. Thank you. Pedro, the average ticket has become lower in an environment where the cost is lower. So in long-term commercial relationships, and I'm starting off this comment in terms of corporate. So in an environment where less people use the benefit, obviously there's increase in the average ticket considering the long-term use. So on average, in the large company contracts, we have a 10-year or more relationship or longer relationship. In SMEs, the dynamics are different. In that segment, there's huge concentration of bank channels, not just in 2020, but also in 2021. There's an interesting increase in revenues and tickets given the launch of new products with higher added value products, therefore increasing the average company ticket, which enables us to say that almost or over the double, almost the triple compared to the competition, consolidated competition. That's the beauty of the strategy. So we can get to customers with a higher barrier of entry given the distribution platform in that we have for SMEs. For individual plans, there are two different dynamics. So we've had in general the faster entrance of bank channels and the Odonto system plans. Bank channels bring the average ticket up, and the Odonto system plans, when sold in that particular segment, they bring down the average ticket. So I can say that we're pricing, focusing on value, and considering the relevant quality standards in the company that are also perceived by our customers around the country. Thank you, Pedro. Thank you, Pacheco. Next question is from Leandro Bastos from Citi. Go ahead, Leandro. Hi, good morning, everyone. Good morning, Rodrigo and Pacheco. On my side, just a follow-up question. I'd like to explore the Odonto system side in the Southeast. I'd like to understand the difference between this product and the others in terms of network, coverage, cost control, compared to regular corporate plans in the region and the average ticket. Thank you. Well, thank you, Andrew. How is the Odonto system plan different? When an employee or an individual has the product, this system has an is works proactively. So they call the member, they call the individual to bring them in for a mouth inspection or hygiene, right? So they come in, the dentist, and this dentist is not the dentist that will give the treatment. So this dentist will inspect them, assess them, and say, and clean their mouth, the first service. And they say, this is the treatment plan that's for you. So you're going to have to treat problem A, B, and C, for instance. And after that's done, the network that will treat this patient isn't the same one that assessed them. So we can inhibit and avoid fraud or waste. So it's a group of dentists that does that first procedure, and then we have a registered network that gives the actual treatment. So once again, we assume that that network, right? So they saw, diagnosed, saw what has to be done, and then with a network that will do the treatment in at a lower cost, even at a lower ticket from a Donto system, you can control DLR in a better way. So for those who are buying the plan, it's a great feeling because they feel that someone's actually taking care of their mouth, someone that was proactive and called them in, for prevention, or at least the first prevention, which is hygiene and explaining which treatment they should get, if it's A, B, and C, or C, scheduling treatment. And we do that in dentist slots that accept that cost and lower tickets. So the news here, the difference in that model, that's exactly the difference in the model. So 2,000 against the 32,000 for Odontoprev, which they're not the same, right? They're different, with a different way to manage these members. That's the methodology and the business model behind that. So even at a lower ticket, you can have controlled DLR. Perfect. And how about the difference in the average ticket comparing both products on average, maybe? At Odonto System, a spectrum that goes from 5 or 6 BRL, depending on the type of plan, mixed or not, up to 30 if it's a more robust plan. On average, we can say 16. Pacheco, correct me if I'm wrong, approximately 14, 16 BRLs. In general, the Odonto System plans are discounted, right? Of course, it's a different business model. So they have a discount in relation to traditional prices that the company has. Once again, it's a different business model. And as Rodrigo called our attention to, it offers a lower price for consumers. And based on the DLR control, we can get the same type of return for the company. That's the beauty of that model. Very clear. One last question. I know that the geographic rollout is pretty recent, but how much could that account for in sales? I mean, after achieving the maturity? That's a great question. It's too early, very early, to talk about maturity. I believe that the company is taking concrete steps in dialoguing with different kinds of not only consumers, but also providers and medical plans to create the partnership. So that's very relevant in this movement. It didn't start today to reach the level that we are at right now. It took a while with important work in setting up the network, the operation in states that we already operated. However, we had different types of providers. And imagine the back office that's necessary to kick off that operation in so many states, like Rodrigo mentioned. That's another important movement. I believe that the company can service any type of risk profile in any state in the entire country. We don't see any other operation with the same type of calling and geography and willingness to offer different customer profiles for the entire portfolio. Great, Pacheco. Thank you, Rodrigo. Have a good day. Our next question is from Mauricio Cepeda, Credit Suisse. Go ahead, Mauricio. Hi, Rodrigo, Pacheco, and Stella. This is Cepeda speaking. Thank you for your time. I'm not going to be too very creative or new in the questions, but in terms of DLR, I'd like to talk about the ticket and timing. We know, as Pacheco mentioned, tickets are dropping because you're going to renegotiate. The utilization was lower, so you can't negotiate the same contract amount. On the other hand, we know that DLR will come back to normal levels, right? So, how do you expect to bridge that and go from one contract that you negotiated a lower amount to DLRs coming back to normal levels? What are you thinking on that for the future? And another more mundane question, I can see that third-party services increased in G&A. That's the only line that's off the historical standard pre-pandemic. So if you can talk about that, please. Thank you, Mauricio. What you mentioned about the company, once again, we're talking about a mix. So if on one hand, DLR was low and consequently the negotiation had low price increases or didn't, that will become normal after a while. And that's the great part of it. We helped many companies, many dentists during the peak of the situation, the companies that suffered the most, and in airlines thinking, and companies that are providing services, cleaning, safety, security for shopping malls and airlines. And we were partners and with them, and that reflected in the figures. When we negotiate that, complying with their servicing, helping them in their expectations, that reflects in the figures and everything when it comes back to normal. And we hope it does because we want people to use that and perceive the benefit of work well done. We're here to provide services. We can't wait for things to get back to normal. So I believe that the dynamics, it the negotiation had a number of different features because of a pandemic. So when life goes back to normal, negotiations will go back to normal for contracts as always. We're not concerned at all with that. And we do have a challenge of winning the contracts, providing good services in all the different segments that we are present. Pacheco, will you answer the next question? Cepeda, about expenses in services provider. Well, in that case, the name of the game again is technology. We're in a large project that'll go on to 2022 with large systems and providing global services. And implementing that project, we will have specifically some groups that provide services and advisory and consulting that are helping us out in that. The project involves all company areas, so we're really excited with the conclusion mid next year. That's the forecast. This is not the first time that we do this, that we work on this. And that will definitely bring us some benefits as of mid next year. Thank you. Thank you, Sapita. Next question is from Eugenia Carvalero from JP Morgan. Eugenia, go ahead. Hi, everyone. Can you hear me? Yes, we can. Good morning. Actually, I have two questions. It's one follow-up in some topics that were already explored in the Q&A. The first one is I'd like to know if you can talk about the cross-selling trend, especially with Bradesco and how that's been helping in net ads. And the second one about pricing. Do you see any changes in the pricing environment given the low frequency that we saw last year? Thank you, Eugenia. In Bradesco, for cross-selling, we've been more integrated than ever. There's a project that we've been running together with it's us, Bradesco Seguros, and Bradesco Healthcare and the bank. So we're very close, working closely. There's a monthly monitoring meeting for the project in addition to the weekly meetings when we're talking about working with banks and companies in all the different segments. So there's a positive moment where we're working together, completely together, so we can do work in common and have benefits for everyone. And above all, providing quality dental services for all of them. So we're going through a very positive moment, and the board also takes part in that and helping out. So that's great news on that side. In pricing, Eugenia, I think I'll hand over to Pacheco later on. But in terms of pricing, it's what we mentioned before. During hard times, we were very sensitive in postponing payments, negotiating, and understanding people's needs, and also in light of DLR, which was lower. So when we see that the company has corporate contracts that are 25 years, 26 years in effect. So why does that happen? Because we have a long-term view with our customers, right? It's not about magic and short term. We have a vision of building a partnership and a relationship as we have in all these cases with big corporate customers that have been with us for decades. And the best answer that we have for that, Eugenia, when top of mind HR, the biggest forum in HR departments in Brazil, and this is the 24th going on when they have the surveys. And in 23 editions, we were the finalists in 22, and we were the winners in 18. And out of the 18, in the past 8 or 9 years, we were top of mind in a row. So the biggest NPS we can have is when we hear from all HR departments in Brazil that are asked and vote in terms of dental plan providers, we are the winners in many editions. So I believe that the dynamic is that we have to focus more and more. We have 19 squads focusing on technology, right? Agile methodology, focusing on servicing members, legal demands, brokers, HR departments. So that's what we focus on. Like I said, we wake up in the morning thinking of mouths and we go to bed thinking of mouths. So 100% of our revenues come from that. We're not distracted with any other areas or segments. Our focus is to see how we can work better and better to enchant our users, be it B2B, B2C, or B2B2C. So that's reflecting in our results. Thank you for your question. Let me see if Pacheco wants to add. Just a couple of words on pricing. Eugenia, you mentioned pricing, and traditionally, Odontoprev has a premium based on the product mix. So we have an average ticket price that's higher than the industry, and particularly compared to the ones that compete directly with us. That spread, that premium should grow in 2021, given the level of aggressiveness that we've been seeing in our peers that are closer to us. The good news is that in 2022, with the recovery of the economic activity and potential job generation, there should be higher use of dental benefits and therefore recovering the average ticket as well. So I believe that the competitive edge that the company has this year will become even more clear, particularly average ticket comparing to our more direct competitors. And you'll be able to see that in the numbers based on publicly available data when disclosed. Thank you, Eugenia. Thank you. Thank you, Eugenia. To enter a question, just click on the Q&A icon. As we have no further question, the Q&A session is now over. I'd like to hand over to Pacheco for his final remarks. I would like to thank everyone for your participation again in this conversation about our earnings for the second quarter of 2021 and first half. We're very focused and optimistic about adding future value. See you soon at our next event. Have a great day. Thank you.